Hello and welcome to our weekly review of the crypto market. It's commonly known that geopolitical and macro factors are able to shape markets and the economy. BTC quotes also get affected. Do you remember how the flagship cryptocurrency zoomed up when world central banks pumped up liquidity globally? However, once they had made a hawkish pivot and started hiking rates aggressively, digital gold quickly reversed and went down. A prolonged crypto winter came to the crypto market, and now it seems that another reversal is impending. The US Federal Reserve's stance on a monetary policy is still the main driving force for stocks, the greenback and Bitcoin. After the regulator's dovish rate decision on February 1, the stock market breathed a great sigh of relief. The silent pressure eased, instilling optimism in the crypto market. In fact, US macro statistics became the main reason behind changes in price charts in the first week of February. The market interpreted Fed Chair Jerome Powell's remarks as a dovish. Consequently, the stock market rose higher and the greenback showed weakness. The BTC price perked at $24,197 on February 2 and hit a low of $22,717 on February 6. The drop came ahead of the Fed Chair's speech. In fact, Jerome Powell's remarks on Tuesday were not much different from those of a week ago. Speaking about high inflation, the chair said that it would be very premature to declare victory or to think that we've really got this. Risk sentiment eased even more after yesterday's comments by FOMC member John Williams, who said that the jobs market was still quite strong and that the Fed's job was not done yet. The greenback instantly strengthened afterward and optimism in the market cooled. Yesterday, Bitcoin went below $22,700 against the greenback. The bulls were not strong enough to go above $23,400. Eventually, the price fell to the mark of $22,951. The coming months are likely to be marked by the Federal Reserve's aggressive and cautious rhetoric. Such a scenario would of course be a headwind for digital gold. Besides, for a long time, the flagship cryptocurrency moved in accord with the stock market, which was quite sensitive to changes in the Federal Reserve's interest rates. However, at the beginning of the year, the situation changed. The correlation between BTC and the main US stock indexes, namely the S&P 500 and the Nasdaq, dropped to a low unseen since December 2021. That Bitcoin may no longer be perceived as a risk asset. It might be that the next step after it loses its correlation with the stock market would be acquiring the status of a safe haven asset. At the same time, many analysts are now trying to explain the unexpected growth of the flagship cryptocurrency in 2023. About a month ago, the asset traded in the $16,000 range. A few weeks after, it gained some $5,000, which is a huge increase, especially in the wake of the disastrous 2022. There could be several reasons behind the reversal of BTC. First and foremost, there is a very high likelihood that interest rates will be stabilized or even cut. In addition, demand for Bitcoin among whales has increased over the past few weeks, while there are those who panic and sell the assets. Some large holders buy out these coins and store them in their wallets until better times, which may be just around the corner. Indeed, inflation appears to be on the decline, and that could put an end to the economic strain we have seen over the past 12 months. Meanwhile, crypto will get one more chance to rally. Clearly bullish BTC quotes have been the main driving force behind the recovery of the rest of the crypto market. market. After all, most stablecoins are closely correlated with the number one cryptocurrency. For example, Litecoin gained about 5% in the previous week and almost 28% for the entire month. In the past 7 days, the price went as high as 102.10 and as low as $97.10. Earlier on Thursday, the quote traded higher at around $98.90. The second largest digital asset by market cap, Ethereum, also posted gains last week, adding 4.3%. It was seen trading in the range between a high of $1,690 and a low of $1,635. Early on Thursday, Ethereum managed to recover to 1,650 versus the dollar. It seems that crypto exchange rates are now more tied to incoming macroeconomic statistics and other data. The effects of the FTX collapse have been fading away. However, turbulence is still felt across crypto exchanges. For example, Binance, the largest crypto exchange platform, is temporarily suspending US dollar withdrawals and deposits starting on February 8. The company did not explain the reasons. The announcement triggered a mass outflow of funds from Binance wallets. According to some reports, users withdrew over $172 million from the crypto exchange in a single day. On the other hand, the crypto market breathed a sign of relief after the news about Genesis. As a reminder, due to the crisis in the crypto market provoked by the FTX fiasco, Genesis owes more than $3 billion to creditors. Now the bankrupt crypto lender has reached an in-principle agreement with them, which begins to resolve some of its major issues. After a wave of corporate bankruptcies and investor losses last year, the global crypto industry has found itself in a difficult position. Now it should brace for tighter regulation and build cooperation with the regulators around the world. Therefore, Binance is working on an agreement meant to restore confidence in crypto and show how advanced the industry is in the fight against crypto crime. The firm encourages other companies to join. In the meantime, many on-chain indicators they are already signaling the end of the bearish phase in the crypto market. This means that consolidation and a bullish rally are just around the corner. It's quite possible that the moment before the rally is the best time to buy Bitcoin. Investors are getting increasingly aware of the fact that the future belongs to digital assets and they do not want to be left out. Meanwhile, our review is coming to an end. Have a profitable trading week and take care until next time.